Okay, welcome to the Swing Trading with Cycles channel. It is January 17th, 2023. We're going to do an update on precious metals today. We will start with gold. So we're going to review gold, we're going to review silver, we're going to do GDX. We'll look at the GDX to GLD ratio. That basically tells us what a miner is looking like compared to gold itself. We'll also look at the gold to silver ratio. And then we'll finally peek at the GDX to SPX, S&P 500 ratio. We talked about all of these in our last video. Let's just see where we stand now. As always, you'll be able to find the last video, a link to a playlist that has the last video in it, in a pinned comment. That'll also have some background for you on cycles analysis, etc. So let's jump into it. Gold. Let's look at the daily chart. And as we talked about in our last video, this thing is really stretched. This is one of the longest daily cycle rallies gold has ever had. I mean, you had this furious up move here. Right? Huge candle consolidation, huge candle consolidation. Then we pulled back for 4 days straight. And then since then, we've just kind of, what has the gain been from that? Let's see, price range. Let's say from this bottom here to there. It's gained 11%, which is a lot for gold. And in this time period. But I mean, my God, this thing is going to crack at some point. And so right now, it's trying to make a swing high. So we did trade yesterday, actually, even though the broader stock market wasn't open. We made a new high yesterday at 1928.95, and then we pulled back. So the low of that candle from yesterday is 1910.94. So as long as we're below, call it 1911, that gives us a daily swing high, right? So I'll draw that line here so you can just kind of see it very easily visually. And that's important because a daily swing high can lead to a weekly swing high, right? Which can lead to a monthly swing high, obviously. Also of note, this blue line is your 10-day move. Is your 10-period moving average. This is a daily chart, so it's your 10-day moving average. And so all this is building up to the idea that gold is going to pull back into a daily cycle low at some point. Doesn't matter how bullish an asset is, at some point it's going to pull back into, it's going to have a multi-day pullback, which is always going to break below the 10-day moving average. And it's not because the 10-day moving average is magical. You could replace that with the 9-day or the 11-day or the 12. Replace it with any sort of relatively short-term moving average, because price can't go in a straight line forever, right? Like, not to belabor the point here, but as we talk about on this channel, price is trend, right? And that's an uptrend, right? We need these parts here, these like declines as part of the uptrend. And right now we've just been kind of going straight up. Obviously we have some of these red candles in here, but at some point we're going to get something more protracted. That's going to be our daily cycle decline. And then the question is that also going to be our weekly cycle decline? And again, pin comment gives you all the background on the cycle stuff. I'm not going to go into the great detail. So what we're thinking about here is yesterday, January 16th, may have been the daily cycle high, and maybe we're beginning the daily cycle decline. Right now, this candle right here is not following through much. So at this point, it's indecisive at best. Certainly not showing you very clear bearish signals. But at some point, we're going to break below the 10-day moving average. Right now, that's around, what is that? That's like right around 1880, right? And I would say structurally, you would think we'd pull back to at least like right there, right? So you could see a move down to like 1870. And what does that mean for the longer time frames, right? What does that mean for the weekly cycle? Let's look at the weekly cycle. And so I have this reminder here. This is our potential 8-year cycle low here, the week of September 26th. That was when this weekly cycle began. We made a new high yesterday, as I said. This is week 16. So we're already relatively late, right? The last weekly cycle, that was really short and weird, to be fair, like topped out on week 3. The one before that was more normal. That topped out on week 12, right? The one before that, week 14. Before that, week 12, week 7. So you're starting to get the idea that week 16 is actually kind of long. But then you go back to the COVID rally, right? Like that's this rally from here to here. That was a 20-week cycle. I pointed this out on Twitter multiple times. That's the most bullish cycle gold has had. Like, look at all these, right? That was 17 weeks, 18 weeks, 14 weeks. These are all counting how long the rallies lasted. You did have this daily cycle or weekly cycle here back in 2017 where gold rallied for 25 weeks. Although you had these kind of vicious little like pullbacks that kind of would have got you off sides probably in real time. And this is really a double top this week 25. All that to say, we're getting later in the weekly cycle. So just as the daily cycle is stretched and it's going to pull back into a daily cycle low, we're also going to pull back into a weekly cycle low. It's going to be a question of, is this daily cycle low going to also be a weekly cycle low? That's what we're going to watch for. And the big signal is making a lower low on the weekly chart. The same way we talked about making a lower low on the daily chart, this swing high, same exact concept on the weekly. In this case, we need to break below the low of this week, and that would be 1865.40. So that's going to be a level to watch. Will that level hold? And again, I believe it. All the evidence that we have so far suggests September was an 8-year cycle low, and so we would expect that this pullback will hold a higher low and will continue the uptrend. And so it's setting up a potential buying opportunity. And the same way that we talked about for the daily, for the 10-day moving average, at some point we're going to cross below the 10-week moving average, which is this blue line here. You can see we're pretty elevated above it. It's actually down here at 1820. Now it is moving higher every day, and so it's going to kind of catch up to price. You know, tomorrow it'll be higher than it is today, and so on and so forth. But that's the level we're really watching, the low from last week. And you'll see it's the same pattern for the other things that we're going to monitor. You want to watch for it. You want to make sure it's not making new lows on the weekly. Once we have a new low on the weekly, just to go back to that, like let's say this candle went below this one, right? Like let's say this week we traveled, you know, below the 1865 level. That would make this candle a weekly swing high, and again, potentially our weekly cycle low. And you can see we had a weekly swing high before, right? You see we have this made this high, and this candle actually made a new low, but it recovered, it closed green, and we got follow through. The other thing is that it was relatively early in the cycle at that point, right? At that point, that was like week, 1, 2, 3, 4, 5, 6, 7, 8. That was week 8, whereas now we're on week 16. And you can see cycles go anywhere from, you know, the 20 to like 30 week range. So at week 16, we're getting late. At some point, we're going to start the weekly cycle decline. It's not a matter of when, or excuse me, it's not a matter of if, but when. It's just a question of the timing. And again, this is your potential 8-year cycle low here in September, this candle. Once we crossed above the high of that candle, which is 1735, that is the structure that we're sitting on top of. I hope you can see that. Like literally, if we break below this, right? Like not to belabor the point, but like just imagine we got a candle that did something like that, right? And closed below it. Well, then that's where we don't have a swing low anymore, which means we don't have a bottom. And what we would really need to confirm is making a low below the swing low like that, right? So we break below this low here. So your first major warning is breaking below 1735, but then you ultimately would need to break below 1615, right? Now there's obviously a good amount of distance even between 1735 and 1615. And so there are a lot of ways to think about how you want to sort of define your risk and, you know, just decide what your own risk tolerance is. But the levels are very clear right now. We have a swing low, a monthly swing low, as long as we're above 1735. And we want to kind of watch that level on this pullback. I mean, ideally, we wouldn't get anywhere near it because I guess where are we in terms of percentages? We are about 10% above it. Right, so you could easily see a pullback of like, let's say 6-7%, something like that. Right? Maybe get really close to it. That creates a really great risk reward, right? Imagine we get down to like the low or the high 1700s. One could add to their position and their stop would be right below this 1735 level. You get a favorable risk reward because right here it's not great. Up here at 1909, you know, we're over $150 above that swing low. So that's the gold chart. Let's look at the others. Let's look at silver. So silver, different counts, but same kind of idea. It's exhausted in terms of the cycle. So silver made a high on day 31. Oops, that's not what I intended. So silver made a high on day 31, which was back on, oh wow, that was actually back on January 3rd. So the second, oh, that's so interesting, right? So The first trading day of the year, we made a high, and then notice we then pulled back, but we didn't break these lows, and we came back and made a double top, right? So this high is at $24.54. This high is at $24.50. We missed it by like 4 cents, 4 pennies. So that was day 31. Today is day 41. But you can see this thing is not, like, it's not breaking down. And, you know, call it what you will. Like, you can certainly see people, I can certainly see folks saying, oh, well, look, isn't that a big bull flag? Well, sure. At some point it'll break out. But that doesn't mean it can't break down first and then start like a slingshot. Again, just like gold, it's going to pull back at some point into a daily cycle low. And you can see we're just hovering above the 10-period moving average. It's been oscillating above and below it really ever since like December 20th. And more importantly, on the weekly chart, we have our high back on week 18. That was the high that we just talked about on the daily chart. And notice the rest of the price action has just been inside that range, which makes sense. You saw that daily chart, how we were kind of chopping around side to side. That's how that looks on the weekly chart. So it's now week 20. The line in the sand is below 23.12, right? If we break below $23.12, that makes this week 18 a swing high and potentially our ICH. Given how late we are in the cycle, it's really unlikely that this is not our ICH. I mean, maybe there's a world where this recovers because it's only Tuesday. Right? We still have 3 days of price action. Maybe there's a world where this recovers and makes a new high, so we get a high on week 20. But how much more upside do you think there could be for that? I mean, look at this. I talked about this on Twitter multiple times. It's similar to gold. The most bullish cycle it's had in the last like 3 or 4 years was that COVID cycle, and that was exactly 20 weeks. And so you're asking for a lot here that we're already on week 20. We have a high on week 18 if you're expecting a lot more upside. Doesn't mean it can't surprise, right? And just in terms of orienting on this chart, again, blue line is 10-week moving average, and the yellow line is always a 200-period moving average, so the 200-week moving average in this case. We crossed above it in style and fashion. You know, we even kind of back tested it with this here. And so I wonder, does this weekly cycle low bring us down to like retest it, right? It is rising as well, so it's going to come up to meet price. And for silver, also has a swing low for the September candle. And for silver, that's above $20 even. So really need to stay above 20. And if you think about it, this weekly cycle rally, like, you know, if we go from Pico bottom to top, was about 7 points. Yeah, just about 7 points in terms of the gain, $7 in gain. And so imagine we give back 50% of that, right? So a 50% retracement. Where are we at? Right. So we're at 24. And so that would get us back to just above 20. Right, so that would be almost perfect, right? Like we are able to stay above the monthly swing low. It's about a 50% retracement. That gets us to, well, that would probably cross, yeah, that would probably cross us below the 200-week moving average. But then it'd be bullish if we were able to close back above it, sort of a false breakdown. So that is the picture for silver, and let's look at GDX. This one is looking the worst of them all, which is not good. So this one definitely is on pace for a swing high today. So today is day 18. Friday was day 17. And so if we close below 32.14, we have a swing high. It looks like we're definitely going to do that. We only have about 45 minutes left to trade. And notice we're coming right up on that 10-week moving average. As I said, for these daily cycle declines, you get a break below the 10-period moving average. So you expect that we're going to break below this, close below it, in fact, as well. And so your question starts to become, is this a daily cycle high for GDX, which would make sense that we're also getting a daily cycle high for gold and silver, right? Like this is the most, in fact, this is the most like definitive, like, okay, this is going to be a swing high. Doesn't mean it's definitely the daily cycle high, but you think about it, we're on day 17, or that was day 17. And more importantly, you'll notice there's a theme here. You have to think about how the cycles fit within each other. On the weekly chart, weekly cycle, this is week 16, and last week was week 15 and made a high. And so we have a swing high on the daily for sure. If we break below $31.20, we will also have a swing high on the weekly, and that will make last week a candidate for our ICH, our intermediate cycle high, at week 15, right? Just like this was our weekly cycle high at week 12. And you'll see the previous like 4 weekly cycles topped out on week 12, week 7, week 11, week 6. And so this is actually the longest rally that we've had. And let's see what it did in terms of percentages, in terms of gains, right? So that was about 50%. Nice. About $11 gain. And this definitely was not 50%. 43%. It was, 43%. So that's actually more points, but because this was coming from a lower base. So that's really interesting. And of course, the rally is as with gold and silver, the rally that you kind of measure everything against was the COVID rally. That was 178% increase. And so this has been a really healthy rally at 50%. Wouldn't be crazy for it to be rolling over right now. And since it was an $11 gain, imagine if we give back about $5 of it, we'll call it $5.50, a 50% retracement kind of situation. That gets you into like the 26, 25 area, which, that would be down here, which is, not ideal. If anything, you'd probably want to hold like around here, like around like 28 structurally, but there's nothing to say that we can't get down to like the 25 area and then bounce and go on to make higher highs from there. Because again, if we did have the 8-year cycle low for gold in September, you'd expect that this weekly cycle decline is going to be relatively mild. That's the expectation. And again, you look at the monthly chart. So in this case, for September, our swing low level for GDX is 25.71. So we want to stay above 25.71 on GDX. Let's look at the ratios now. We just got a couple of ratios to look at really quickly. Let's look at gold to silver. So the daily cycle is on day, and reminder, this thing, when it's bullish, it's bearish for metals. Not good. So far the high is on day 17 and it's day 19. So day 19 and the high is on day 17. And this is important because if you think about it, it makes sense intuitively. When this thing starts to go gangbusters, that tells us that the ICL, the weekly cycle decline, is in motion for precious metals. And because if you think about it, if gold and silver are declining into a weekly cycle low, it makes sense that gold would outperform silver because silver always gets taken out to the woodshed. Silver always goes down a lot more versus gold. So if they're both about to go down because they're both going into weekly cycle decline, you'd expect the gold to silver ratio to spike. And notice we've had a downtrend on the daily chart, right? This cycle topped out on day 8, was 25 days long. This cycle topped out on day 7, was 31 days long. In this case, we've already run to day 17, so that's already a changing character, right? Like we're right translated, as they say. And from the looks of it, it looks like it wants to run a little bit more even. And if we think about what that did to the weekly chart, looks like we're in a new weekly cycle as well. I counted it as week 36. That was our weekly cycle low. That was back on the week of December 19th. And this would be week 4. And so what we're going to be watching for here is this weekly cycle to roll over to signal that the precious metals are ready to kind of run again. So we'll be watching this one pretty closely. And GDX to GDLD is the opposite. We want to see this be bullish. We want to see miners outperforming the metal. And this one I've been tracking on the weekly cycle level really importantly. And just like we said, GDX might have made a weekly cycle high last week. This one looks like it did as well, right? Like this one, in this case, we already have the swing high, right? Like it's already here. Now we still have to close below it, to be fair, just that, so because GDX is working on a swing high, but this is already below it. You see that? Like the current weekly candle is below the low from last week, so this is a swing high as of right now. Not a good sign. This is happening right below the 200-week moving average. Also not an auspicious sign. Let's see, what is that doing to the monthly? So far, just an upper wick, right? But you want to watch for the low over the previous month, which was 0.17. So that's a fly in the ointment for sure. And then we want to look at GDX versus SPX. That one had started to kind of wake up a little bit. And let's see. Yep, so that one seems to be printing a swing high as well. I don't have a count on this, obviously, but you can see That's a pretty clear as day swing high right there, right? Crossing below that line right there. Yikes. Okay, that's good to know. That's important to know about. That is very important to know about. So, and the last one I'll just look at really quickly is platinum. So platinum printed a major cycle low in September as well, it seems. So it was kind of signaling that the precious metals were ready to run as well. But look what's happened. Look at this monthly candle. Ooh, that's not good, right? You know why that's not good, especially, is that this sets up the potential for this to become a lower high. Like that's a lower high, and that versus that versus that. You see that? I mean, now there's still a couple weeks left in the month, so this could reverse. But the fly in the ointment here is that we're probably moving into the weekly cycle of decline right now, right? So if you look at the weekly chart, again, same kind of idea as we just talked about for the ratios. We so far we have a swing high. Now there's 3 days left to trade, so things could change. But we've got to get back above 1040. That's the level to beat. Otherwise, it's possible that our weekly cycle high was week 19 last week, and that would mean platinum is moving into a weekly cycle low again, potentially signaling that precious metals are going to do the same if they're not already, right? So that's the rundown for precious metals. We'll leave it at that. Thank you for watching this installment. I'll continue to give updates on Twitter, so follow me there if you're not already. And if you enjoyed the video, please like. It helps other people find it. Definitely make sure that you hit the notification bell if you're subscribing as well, so you can get those real-time updates. Thanks for watching for now.